Well, for more on this topic, we're joined by CGTN's global economics analyst, Saruhan Hatipoglu. He's also the CEO of Business Environment Risk Intelligence. We got you in because you can explain these things nice and simply, and they are very dry, very complex. What do you think prompted the central bank to make this move?
Well, I think there's a couple of things, but I think the most important thing is not being talked about, and that is the more than $450 billion that the state banks own to the People Bank of China. How did they get this loan? They got it from medium-term lending facility, and they have to pay it before the end of the year. Now, China used to do short-term capital injections to the economy, but this wouldn't help. So they had to cut the required reserve ratios to help them pay this amount that they owe. But at the same time, look, the economy is slowing down. There are problems that are beginning to emerge, and banks definitely need to have large and small size both.
So I just want to be absolutely clear. All these banks have to have reserves just in case the loans go south on them.
Absolutely. Yeah.
And this amount is being reduced. So exactly where do you think it will go? I gather it's in two places, SMEs and also something called debt equity swap. What's
Correct.
That?
So the large banks will need to, they're ordered to, change debt to equity by the companies that borrowed from them, but they can't pay back. So they can't actually get this new money and then provide new loans to companies, which is great. But the small companies, and it's about 100 billion, 75 billion of which is to large banks and 25 billion of which to smaller banks are able to actually lend this money out to the economy. So there's going to be a lot of monitoring, there's going to be a lot of regulations, but this is a right step to take in an economy that's slowing down.
So overall, what will this do to liquidity in the global classic capital markets?
Well, most of the liquidity is going to go up, especially when the small banks start getting more loans out there. But in terms of what the large banks are going to do, again, since they're converting debt to equity, that's not going to do immediately anything to the economy, but what it's going to do is reduce the debt for the companies that are unable to pay back to state banks, large banks that they borrowed from. So that's a good thing because, as you know, the loan ratios in China have gotten out of control in the recent couple of years.
What is your take on the recent fall of the Chinese yuan? It's had its worst month ever in the last couple of weeks, in the month of June. What does that tell you?
Well, it tells me a couple of things. China is worried about growth. So last year, actually first quarter this year was 6.8% growth, which was good. But barring export growth, that growth rate would be about 6.5%, which is concerning. So yuan devaluation, depreciation is something that's going to take place because of these policies. But at the same time, I think there's some kind of a message being sent to Washington that, yeah, maybe we may not do tit for tat for tariffs here, but we can actually reduce the value of our currency and cause some problems for you. And the fact that it's coming into play on July 5th, a day before the tariff decisions are being made official in Washington, is something to think about.
We are just hours away. I mean, 3.5 hours away from these two countries going head-to-head over the trade issue. How do you think everything that you've said so far and the fact that we're now waiting to see whether Washington really does impose the first tranche of tariffs against Beijing goods, how will that affect the global trade issue?
Well, global trade, and I've been asked this many times, John, I don't believe we're in a trade war yet. Even tomorrow, I don't think we will be in a trade war yet. But the probability of a trade war has increased immensely. Now, that is going to be slapped on 34 billion, followed by 16 billion. Let's see what China is going to do. I think China is going to actually match this. But we've heard President Trump today, right before he went to Montana, that he'll actually escalate this. He doesn't care. It could go to 200, 300, 400 billion dollars. If we get automobiles, if we get computer chips subject to tariffs, then I will call this a trade war.
It's so hard to know, though, isn't it? Because you're still, even this week, getting conflicting messages from the administration. You know, the Treasury Secretary says one thing, the Commerce Secretary another, President Trump says another. It makes it very hard to predict.
There's not unity within the administration, that's for sure. We have a President Trump who, you know, I told our clients today that just because you have a hammer doesn't mean that everything needs to look like nails. But with President Trump, I think it is. But he's still getting advice from some globalists in the administration that this is not the right way to go. We'll see.
Just quickly, very quickly, are you looking for more yuan depreciation or no?
Yes, in the short term, I am.
In the short term. Thank you very much. Appreciate it.
Pleasure.
That was Saruhan Hatipoglu. Thank you for being with us.